What's up, everybody? It's your boy Sad coming to you with today's stock pick, indicator help, and general investment tips. Remember, this channel is all about no face, just facts in 5. I do the research so you don't have to. Today we're looking at Tesla, ticker symbol TSLA. But this video is not just about Tesla. This is about one of the most important chart patterns every investor and trader needs to recognize, the head and shoulders pattern. And when you look at Tesla's one-year chart, this is a great example of how a stock can run hard, lose momentum, and then start flashing warning signs that the trend may be weakening. A head and shoulders pattern is a potential reversal pattern. That means it usually shows up after a strong move higher, and it can signal that buyers are starting to lose control. The pattern has 3 main peaks. The first peak is called the left shoulder. Then the stock pushes higher and forms a bigger peak called the head. After that, the stock tries to rally again, but fails to reach that same high. That final lower peak becomes the right shoulder. Underneath all of that, you draw the neckline, which is basically the support line connecting the major pullback areas. Now here's why Tesla is interesting. Tesla has had a huge run over the last year, but the chart structure shows that momentum may be getting tired. You can see the first strong rally, then the bigger push higher, then another rally that does not quite have the same strength. That is exactly why traders start paying attention. The chart is telling a story. First, buyers were aggressive. Then buyers got excited. Then buyers came back again, but with less power. That right shoulder is the key. When a stock forms a right shoulder, it means the market tried to reclaim the previous high and failed. That failure matters because it tells us sellers may be stepping in earlier than before. And once price starts moving back toward the neckline, traders begin asking one major question. Will support hold, or is a bigger breakdown coming? The neckline is the most important level on this entire chart. Until that neckline breaks, the pattern is only developing. But if price breaks below that neckline with strong selling volume, then the head and shoulders pattern becomes much more serious. That is when technical traders start looking for downside targets based on the height of the pattern. Now let me be clear, a head and shoulders pattern does not guarantee that a stock will crash. No pattern is perfect. False breakdowns happen all the time. But this pattern is popular because it shows a shift in market psychology. It shows that buyers are no longer pushing the stock to higher highs. It shows momentum weakening, and it gives traders clear levels to watch. For Tesla, the bullish case is still there because the company remains one of the biggest names in electric vehicles, energy storage, robotics, autonomous driving, and artificial intelligence. Tesla is not just a car company anymore. A lot of investors still view it as a technology platform with long-term growth potential. That is why even when the chart looks risky, traders still pay close attention. But the bearish case is also real. Tesla trades with a premium valuation, and when growth stocks lose momentum, they can pull back fast. If the chart confirms a head and shoulders breakdown, short-term traders may become more cautious. Momentum buyers may step aside, and sellers may try to push the stock lower toward the measured move target. So what should investors watch next? First, watch the neckline. That is the line in the sand. Second, watch volume. A breakdown on weak volume is less convincing. A breakdown on heavy volume is much more serious. Third, watch whether Tesla can reclaim the right shoulder area. If the stock breaks back above that level, the bearish setup could weaken quickly. This is why technical analysis matters. It does not predict the future, but it helps you prepare. Instead of guessing, you are watching specific levels. If support holds, bulls may regain control. If support breaks, the pattern could trigger more downside pressure. The big lesson here is simple. Do not just look at price. Look at structure. Look at momentum. Look at whether buyers are still creating higher highs or whether each rally is getting weaker. Tesla's chart gives us a great teaching moment because the pattern is easy to see and the levels are clear. So for today's video, Tesla is not just the stock pick. Tesla is the chart lesson. If you are learning how to trade, this is the kind of pattern you need to recognize before everyone else starts reacting. because by the time the breakdown is obvious to everybody, the move may already be underway. Like, subscribe, and comment some stocks you want to hear about as we continue our journey toward 10,000 subscribers.